Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. We have a very special episode today. We're going to be talking about, is 2023 going to end in a recession? We're going to be breaking down everything you must know, how to prepare, things to do. So I hope you guys all enjoy it. And guys, if you have any questions, let me know down in the comments and hit that like button, subscribe, because it really helps me out when you guys do that. So let's dive into this. Alright, so do I think we're going to enter a recession? Well, looking back at history tends to repeat itself. So I want to break down some key points. Now, the first thing we have to look at is the banking sector. We've seen several banks like First Republic, we've seen Silicon Valley, and a variety of other banks actually collapse and offering, the federal government to step in and pretty much bail out the banks. What does this remind you of? 2008. Not to mention, we also seen the exact same interest rates as 2008. So we're seeing banks collapsing, we're seeing a lot of fear, a lot of emotion, and people just don't know what is going on right now. And just to put the cherry on top, we also see conflict overseas. Now we've seen countries like Brazil actually drop the US dollar from their primary currency to the Chinese currency, which I know people don't care about that, but that is very important for international trade. Also, we still see conflict with China and Russia and Ukraine. That whole situation over there, it's just like we're sitting on the train tracks. We are playing a game of Monopoly and we're all yelling at each other about the game, and yet there is a train coming. We need to prepare. So how do you do that? So the first thing I would highly recommend doing in order to prepare for an economic recession or a crash in the market, the first thing is paying off high interest debt. This is just credit cards. The reason why credit cards are pretty much a burner is because you're paying monthly on them, and the average rate for a credit card ranges from 19 to 28%. So it's money left on the table, and it's better off just paying those off as soon as possible and use that money for bills, because during economic downturns, we also have a tendency to see job loss, and the last thing I would want to see you guys have is job loss and you have these high credit card bills. So the second thing that I would highly recommend doing is holding cash. Cash is king, especially in an economic recession. You can use that cash to pay bills, and you guys can buy very affordable stock, because normally, historically, anytime we have an economic downturn, that always represents the absolute best opportunity to buy companies at a very low price, and you always can sell them higher. So holding cash is key. Cash is king, especially in a recession. All right, the third thing that I would highly recommend doing is do not sell your investments. Most people get very scared and emotional when it comes to their money, but looking at this chart, this is just showing the general S&P 500. You guys will notice that we have a beautiful upward trend, and through all the bull markets, bear markets, Great Depression, 2008, the dot-com bubble, it's had an average annual return rate of 10%. So as long as we just continue to hold and look at a long-term outlook, the S&P and all these stocks, will be okay. All right, and the last and final thing that I would highly recommend doing is developing some sort of side hustle. Side hustles are super important. This could be anything from, renting out table and chairs, to renting out a bounce house, to vending machines. Having a side hustle will give you that little cushion in your income, so if something were to ever happen with your 9 to 5, you can kind of use that side hustle money to pay off some bills. It's very important, and I would just highly recommend it. Now, to answer this question that I'm sure all of us have is, when will this happen? I don't know. No one has a time machine. I do not know. I'm just sharing my opinions. We've seen news article about all these. We've seen analysts stating we're going to crash. We've seen the Wall Street Journal stating we're going to crash. So it's almost like we're just sitting on a train track. We're waiting for it. We're pending it. The Fed's doing their best in increasing those rates and trying to just get the economy to kind of calm down and cool down. But I think what we're going to see is some sort of economic downturn, probably in the next year to year and a half. I think most likely we're going to finish out the year pretty much just stagnant. You know, probably not selling off as much, but overall, going into 2024, I do think we'll see some more sell-off. But obviously, guys, this is just all my opinion, so do your own research before you guys invest and make any financial decisions. Do your own research. This is like a fun channel that I really, really enjoy. And so, guys, hit that like button, subscribe, because it really helps me out when you guys do that. So we'll see you guys later. Take care. Short video. Hope you guys enjoyed it.